Jeff, we call you a noted bull, but here you are making a move that is sort of anything but. What are you thinking about Ethereum?
Absolutely. So I think that investors now understand Bitcoin to a degree. Yeah. So I've come on this program a few times talking about Bitcoin. It's kind of like digital gold. Yeah. So relatively simple story. Ethereum, by contrast, is much more complicated. It's a form of technology. I like to explain it as if you think about in your iPhone, the iOS system in your iPhone, that's kind of what Ethereum's doing. And then other things, applications can be built on top of that. Now, in terms of Ethereum's tech stack, again, it's much more complex in the Web3 space than the iOS example. And to get to scale, Ethereum Foundation has had to come up with a few relatively novel solutions over the last few years. And the route they've gone down is to have a second layer, not surprisingly, called layer 2 solutions. So that there's a few second layer tech stacks on top, and they create scalability. Now, you can view that one of two ways. I had been viewing that constructively, thinking, well, over time, that means fees on Ethereum can remain low, so it remains competitive against its competitors like Solana, for example. Yeah, and so prices in terms of transacting on Ethereum have come a lot lower because of the layer 2 solutions in the last couple of years. So that's a good thing, inverted brackets. But the cost of that is that fees, which would have gone to the Ethereum mainnet, have been going to layer 2s. And specifically, since a large upgrade last March, a lot of the profits, if you like, are being taken by those layer 2 solutions. Now, that could be okay in the medium term because sustainability is, again, boosted on lower fees, etc.
Right.
But for now, and what looks like quite a long time, all those profits are being taken off-chain. And Base is the largest layer 2. They're owned by Coinbase.
Right.
And 80% of all revenue that goes through Base now gets paid through to Coinbase specifically. So a complicated story where the value is being taken away, if you like, from the Ethereum blockchain.
It is very interesting and a bit complicated. And of course, we're talking here about the digital assets, the digital currency directly. How do some of these new ETFs play into your theory?
So the ETF story for Ethereum wasn't as constructive as it has been for Bitcoin. So in Bitcoin, we got to about $40 billion of inflows was the high. Ethereum's ETF started in the summer last year. A relatively unusual time for ETFs to be launched, and up until the Trump election victory, really there were almost no inflows at all. Since then, you did see some inflows into the ETFs post Trump's election victory. So that's a somewhat positive story, but they have significantly underperformed, again, those Bitcoin inflows. So for me, the key point here is that Ethereum, which has been underperforming Bitcoin for the past several months, is probably likely to continue to do so. I think in the next couple of years, we go to all-time lows on that cross.